Hi, Rebecca Jarrett-Dalton, Two Shoes Mortgage Brokers. I want to talk with you about a typical question that we get asked by our first home buyers. Should I save my deposit first or should I pay my loans off first? Now, there is no actual one size fits all answer to this. So what I'm going to say to you is get some advice, and what the advice will be looking at is your income and the actual amount of deposit that you have. So if I see someone and they've got a really strong income, they can really easily afford the home loan repayment and the other car loan or personal loan repayment, and the bank's calculators kind of agree the same, then what I would say to them is it possibly is more important in those instances to have a bigger deposit going in, save yourself some mortgage insurance, and make you more attractive to a lender. At the bottom line, lenders are looking at income and affordability number one, but then the next thing that they look at is actually balance sheet. So what is your mix of assets and liabilities? Do you owe more than you own? And in that instance, saving up more of a deposit will make you a more attractive borrower. The flip side of that is if someone isn't so strong in an income perspective, perhaps it's just an average income, and the repayment is actually making the new proposed repayments through the lender's calculators quite tight, then you might be better off to take a big chunk of your cash and pay those loans off and get rid of them, and then commit to saving that same amount of money and growing your deposit as fast as you possibly can. That will make you look like a stronger applicant. We do see people from time to time who say that they've only got the loan just to show that they can have a loan. They've only got the loan for credit history. That's kind of old thinking, so it still is somewhat valid in that a brand new credit file is not so attractive to a lender, but at the same time, a big deposit, no liabilities or very few liabilities, that's really very attractive to a lender. So we balance the two off. Modern thought process is almost everyone who has a postpaid mobile phone has a credit history. So you possibly already have a credit history without taking out any type of finance and having to manage the repayments on it. So it's not necessary to take out finance to prove your worthiness. It's not necessary to pay all of your debts off if you have a really strong income, and having more deposit would make you look more favourable. And it's not necessary to have a really huge deposit and some loan, or it's not advantageous to have a big deposit but high loans if your income isn't quite as good. Now, the other thing to consider is we do have lenders who actually don't require you to have any savings to contribute yourself, although of course we strongly recommend that you do. There are guarantor loans that can allow you to get into the property market as soon as possible. These are ideal for people who've been renting for a while and just kind of struggling to get that deposit together. Today's rents are very high and it is challenging to save. Sometimes the rents are as much as what your repayments are going to be. So the banks can see the sense in that, and we have got these guarantor loans. What a guarantor loan looks like, I'll go into in a more detail, but basically a guarantor might offer their security property as a backup security to make the lenders happy to lend to you. More on that another time. Thanks.